For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. In this module, we're going to be talking about playbook best trade setups, but also rinse and repeat. The main purpose of the playbook, and ideally we're looking for opportunities that are going to give us a buy low targeting asymmetrical risk reward from one side of a range to another, whether that's in the long direction or in the short direction. And what's happened with a lot of traders, so just to reinforce, so think of it this way: if our daily chart is trending higher, our daily is trending, and we're making higher highs and higher lows, and we're waiting for a low of day buying opportunity, if it presents, to stay in line with the higher time frame. And so this is the primary rinse and repeat setup. Now, obviously, there's going to be traders who position themselves in an existing trend. Now, our daily trend may break out in the beginning of a month, and we're making higher highs and higher lows. And traders are trying to short the breakouts in a market that's making higher highs and higher daily lows, when in reality, we want to be looking for a market that pulls back to a daily level, a low of day level, to give us a continuation trade. If we're in a strongly trending market, we want to buy the low of the day in a market that's continuing to trend. Let's make this a little bit more understanding. It doesn't matter if we're targeting the low of the week to the high of the week, the low of the month to the high of the month, or the low of the day to the high of the day. And we're still looking at the same opportunity. So we have a market that's broken out of a monthly level. We may get a reversal first green day, and then we're looking for low of day buying opportunities. Now, we may be in this trade early on and recognize that we have an opportunity that this may continue throughout the month to go higher. But each day, if we have a low of day buying opportunity in line with a stronger breakout market, we're targeting potentially not only the high of day, but the continuation trade to go higher if we wanted to leave a trailer in the market. Now, this is, again, level to level, because we're looking for large scalable opportunities. Now, a lot of traders, I think, have kind of been attacking it the opposite way. Every time a market breaks out, they want to try and sell the high in a market that's still going higher. So the great thing about levels is this: if you have this information and you know what you're hunting, in what instruments are giving you that behavior, it doesn't matter what the instrument is. You just need to understand what setup are you hunting, and is there an instrument setting up or giving you a signal day, and then does that setup offer you a trade in your sessions? Now, if you understand level to level, you'll understand the explosive nature of these trade setup opportunities when they present. And if you're trading inside, again, that's a different decision by the trader. So some traders are trading the moves, and that's okay. Some of those moves are going to be explosive because they're coming off of 50% levels, off of a first green day or a first red day parabolic coil sideways, maybe at closing price. But ideally, if we can find these explosive trades that are scalable in size, the ACBs, there are different types that can come in different sessions, but they're not coming back, especially when we start a new month, new timing cycle, and we find those types of opportunities. Those are the ones that go into profit very quickly. They explode fast. They happen on any instrument, and they don't come back. Now, if I don't have the levels, then the next best case scenario is, of course, I can still have trades that align with first red day, first green day. But if you're patient and you're hunting the best setups, often the pairs that give you the signal, if you follow that through, you're going to find an explosive opportunity. The next question will be, does it happen in your session? But the patience and understanding of going level to level is where we're targeting asymmetrical risk reward. And if it's a strongly trending market, now we're talking even more than range. We're getting range expansions. So if you have a basket of instruments, you can easily just look for signal days on our higher time frame, but also instruments that on a day itself may break out, and then does it offer you the setup in your session? Now, most of these will come from signal days, whether you're already in an existing first green day template that's in a strong move, or you're in a first red day template that's in a strong move. May offer us markets closing in breakout as counter trend days for ACBs, or we can get opportunities that are just low of day buying opportunities in a strongly bullish market, or high of day selling opportunities in a strongly bearish market. The key thing, though, is understanding that when we have these levels targeted in line with the higher time frame, you're talking about scalable trade setups, not ones where I'm trying to counter trend a market that's in a strong move and catch the high where they explode back up again. It didn't work. Or we're trading on the inside and we're catching the move and the blow off, which again, there are scalable opportunities because you could be now entering under the backside. So it's important, are you on the front side of the move or the back side of the move? Have we broken any daily levels? If we haven't and we get a breakout, we may have an explosive reversal setup in our timing window in the session that you're trading. Most important thing though, traders, is rinse and repeat any instrument. What setup are you hunting? And then have the patience to filter through the instruments looking for signal days and the ones that potentially may be in strong breakouts or reversal templates and they're already broken monthly levels. So if we break out in a new month, we may have a market now that's setting up for an explosive reversal or continuation trade where we can look for selling or buying opportunities in line with that higher time frame. Now, making things dummy proof is entry, stop loss, take profit levels. Those are the only three things to do. So you can only control how much you will make on a trade, how much you will lose on a trade. So we'll look at some specific examples today from Non-Farm Payroll's Free Cash Friday. Now, I repeat the phrase, though, what setup are you hunting? So traders will often say, how did I miss that trade? Or how did I miss this trade? Or how did you see that trade? And my response always is, well, what setup were you hunting? Were you hunting a first green day trade? Were you hunting a reversal trade setup? Were you hunting a trend trade setup? It's Friday. Now, Friday is day 3. Always, it's the closing range of the week, and there are two types of opportunities on a well-engineered template on the day. Trend trades or reversal trades. We're going to look at some examples of each of those and just keeping things simple. Entry, stop loss, take profits. Those are the only things that you can do. First up is the British pound. We had a market that closed in breakout at the highest closing price of the week. Monday, Tuesday, Wednesday closing in breakout. Thursday going higher and closing in breakout, giving a signal day, bringing a pair up on our watch list. Now, traders in London got the opportunity for the ACB template, the all-in scalable opportunity. Page 29, basic model for trade entry criteria. This is a 15-minute chart. And remembering, entry, stop loss, take profits. But we also had the opportunity in the US session for the low-hanging fruit continuation trade. The same process applies for that example as well. Entry, stop loss, and a take profit level. Now, because it was a non-farm payrolls Friday, I would have been exiting as we came back to the level, the breakout low of day level on top of the high of day from Thursday, because it's a non-farm payrolls Friday. And the reason why is because typically an ACB template will be hold till close. Now, we were trading before a high impact major red news. This could have easily came back up and spiked and reversed and came down, or reversed and came down and came back up, whatever that is. But take profits before non-farm payrolls. And then the low-hanging fruit continuation trade, page 96 in the playbook. And all that is, an excellent question today from a trader was, can you go over low-hanging fruit? Well, this is the low-hanging fruit. What low-hanging fruit is that when I don't get the opportunity for the trade in my session, so for example, I'm looking for the ACB in the New York session, I come to the screen and London got the trade. So the low-hanging fruit is just the trend continuation trade in line with the original ACB thesis. British pound, a beautiful Friday reversal trade. Only two types on a well-engineered day 3, Friday, the closing range of the week, every single week, day 3, reversal trades or trend trades. And we had a beautiful ACB reversal and low-hanging fruit continuation trade in the British pound. Now, another instrument that came up on our watch list, major pair, major currency pair, Japanese yen, closing in breakout, low of the month, low of the week, heading into non-farm payrolls Friday. Now, we have a very well-engineered template. What is a well-engineered template? Specifically well-defined high and low forming a box. Trader asked today, can you go over what a box is? It's a rectangle, a high and low. That's it. Every single day we have a box made by previous daily levels. If they're violated or the range expands, we redraw the levels. Remember, level to level. So we have a market that has closed in breakout and then reversed prior to non-farm payrolls. We have a pin hammer at the low of the month heading into our U.S. session prior to non-farm payrolls. So one of the things with the pin hammer, if we go back to our original simple model, whether we're selling or buying, if our thesis is that the extreme is locked in place and we're entering in either into a reversal or an existing trend trade, entry, stop loss, take profit. Now we have non-farm payrolls, so we need to wait until after the news release. Now we're on a 1-hour chart, so thinking in simple terms, if 8:30 a.m. is the non-farm payrolls release, we may be looking for an opportunity towards the end of that hour or the beginning of the new hour. So if you're like my friend Steven and you're hunting reversals, this may be a setup that you're looking for. Now this market proceeded to auction higher, making higher highs. We're on a 5-minute chart now, and this market on non-farm payrolls went vertical, but not that far, not a very non-responsive sort of non-farm payrolls. But our non-farm payrolls candle, if we draw that low across, we have a market that continued to push higher before dumping down into the beginning of the third hour after 10 a.m. Then the explosive engulfment for a simple entry stop loss placement at the extreme. So if anybody got in earlier, the thesis on this trade, if the low of day is locked in, I would be placing my stop at the overall extreme. As we head into the 10 a.m. hour, the 10 a.m. club, that market should now be accelerating. We've had 1 hour, 2 hours non-farm payrolls, and now we're entering into the third hour, an explosive engulfment for the reversal trade back up through the high of day level. Now, another instrument that came up on the watch list today was oil. It's broken through the low of year levels heading into non-farm payrolls Friday, the closing range of the week. It's in breakout heading into our U.S. window. Question for everybody is, what setup are you hunting? Are you hunting reversals? If you are, then you're looking for the reversal setup, level to level. We put a new low in place before auctioning higher prior to our U.S. window. Just a simple basic model. We've gone higher, putting in a low after breaking through the low of year level and then coiling sideways and dumping down into the new low established in the London window, in the gap. And then we get our engulfment. Again, the 10 a.m. club, patiently waiting, sitting on their hands, a 1-bar stop, entry, stop loss, and a take profit level on top of the wicks on the peak formations made after the breakout. A $2 target for traders targeting the reversal. Now, obviously, for traders who are savvy and went down to a smaller time frame on the 1 minute, keeping things simple, getting in, placing a stop, a take profit level, and walking away. A Friday reversal setup on oil. There were multiple instruments that gave opportunities, but I want to just address a couple of simple things. Really simple. New hour, new timing cycle on the DAX, massive collapse. We get our pin hammer beginning of our 9 a.m. hour. It's really simple, low-hanging fruit. Why would you want to counter trend a market that's in a strongly collapsing market, we have our pin hammer, just what we just looked at, entry, stop loss, take profits. Keeping things really, really simple. Entry. Now, if this trade is going to collapse, there shouldn't be any heat. So the second pin through the high in our new hour and the market starts to break down, taking a position in the market, and I would use the most recent high as a max stop loss rather than the larger candle. And the reason being, just as the thesis is, if this market's about to collapse back down, it should happen fairly quickly. Entry, stop, take profit. A low-hanging fruit. We're already down quite low. I have no illusions. The market could continue to break down if traders wanted to leave a trailer, but it's Friday. We're getting into the later part of the day, but just simple. And next, we'll address a specific instrument that gave just a massive range expansion and how that came up on a trader's watch list potentially, and whether or not there was an opportunity there. Now, first of all, we have the Euro-Australian market on daily chart in breakout in March. Now, I want traders to think long and hard. We'll blow this up. Market's in a strong breakout, long and hard. So first of all, as we've talked about just in the longer video in the playbook that I've just downloaded about a low of day level buying in a strong market. So here's the simple thing to remember. Go back and read Peter Brandt's book. Go back and read Schabacker, Classical Charting. The whole concept behind all of this, okay? You notice I'm drawing highs and lows and defining rectangles. Daily levels are the smallest time frame to identify breakouts or markets that are setting up for breakouts. Now we have a market that has broken the low of month level in February and then reversed and broken out in March and traded higher. So let's just zoom in on this a little bit further. Now we have a market that if you look at these daily bars, find one day where there's a low of day buy setup anywhere in here. In all of that, one low of day buy setup. Now the market breaks down and puts a low in place. Puts a low in place. Trades higher. There's a low of day level broken before pushing higher and then dumping back down. Now let's go and just look at this. Puts a low in place. Auctions back down into that low again. And then trades higher. And then into our new month, we have a red candle inside of our box. So traders convinced this was a first red day signal. Now here's the thing. Let me just draw a larger box here. There's our high low. How can there be a first red day signal inside of a box? We have to have a first red day signal coming off of that level. A first red day signal coming off of that level, whether that's playing into the new month, whether it breaks down and now we're on the backside of a month. And so when traders say, oh, you're just cherry picking, you're darn right I'm cherry picking, because there's no first red day signal inside of a strongly trending market. And again, I'll ask the question, what setup were you hunting? So if you're hunting a first red day setup, wouldn't you want to see this break out and then fail and give you a first red day signal and then maybe pump back up and give us the first red day trade? So when we're inside in a market that has continued to auction higher without breaking any low of day levels and then consolidating, dumping down, putting a low in place, dumping again, and then trading higher and forming higher highs, not a first red day, but in fact, a first green day pin hammer. Now I'm just painting a different picture so that traders can visually see from a different perspective a market that's trading back down, but it's not going lower. And then we get higher highs at the end of the month, heading into our new timing cycle. And then a reversal candle where traders want to short this into a market that has tried once, tried twice. They're going to try a third time. Shorts are in the market, and that day reverses and closes as a first green day in a new month and a new timing cycle. So the concept to understand here is not that there's not a first red day, it's that you're selling into a market that's in a strong breakout. So they can be working the low, as we just saw, working it again, but week 1, week 2, week 3, how does price behave? Week 1, week 2, auctioning back into the breakout, we're into the end of the month, into a market that has failed to break down. This long trader who's in breakout is still holding their position. They haven't been stopped out yet in a strongly trending market. Now, I want you to think about this. I keep saying to traders, the setups are all based off the higher time frame. So think about this. We're entering into a higher time frame trade setup on a smaller time frame. The whole idea is we're attacking markets that are potentially about to go level to level. Beginning of a new month. What if that's the low of the month and we're going back through the high of the month? And if we're in a strongly trending market, what if we're about to do a range expansion? That's the whole gift that we're hunting. A market on a higher time frame that is potentially going on a range expansion. Now, if you get the opportunity to buy the low of the month, wouldn't that be worth taking a position in? Now here's the thing. We had volatile news around President Trump's speech regarding tariffs and everything else, but the thesis is in place. Then we have a signal day of a market closing in breakout after a first green day signal in a strongly trending market. Breakout, consolidation, possible continuation. Now we have a rectangle. Classical charting, go back and study Peter Brandt. We're already in a range expansion from the initial breakout. We're already in a range expansion from the initial rectangle from February. Now, if we're going to go on a range expansion again in the new month, there's our box. Is it possible we might have an opportunity where this market is now potentially on day 3, 2 types of trade setup opportunities, Free Cash Friday in a well-engineered template, either a trend trade or reversal trade. Now let's go back and just think again, simple. We went over this in the masterclass, but I've talked about this. 1, 2, maybe we're going to get a third explosive move or a third day to the high. Traders from the masterclass will recognize this coil already setting up heading into our Asian session for the continuation trade. Now again, just basic model for trade entry criteria aligns us with the already existing strong breakout. Now we have an opportunity heading into our US session for the explosive continuation trade in a market that is already on a range expansion. Breakout consolidation. Now let's just even put the basic model for trade entry criteria on our daily chart. Our daily chart. Basic model for trade entry criteria on our daily chart. If you were short on the first day of the month, guess what happened? Somebody bought the reversal in a market that is already pinned down into the low of our consolidation. So let's just pretend you're trading this on the higher time frame, on the daily chart. Entry, stop loss, and a range expansion. Even you don't even have to put a profit target in. You could put a break-even level in at the close above the high of the box. Now, if most breakouts fail, this breakout should have reversed the next day, as our ACB class knows about. But we're on the front side still of a market that's in breakout. Go back and look at these daily levels and show me one day where a low of days been broken. Higher highs, higher highs, higher highs, higher highs, and higher lows all the way up until we hit our first range expansion. We auction back and put a low in place and trade back into the low. Are they working the high or are they working the low? Higher highs, dumping back down. There is no first red day here. Now, if traders were looking to continue the trend trade, this still offered a 100 pip range, 100 plus pip range back to the high of the day. Trying to counter trend a strongly broken out market is why traders will blow out their account. What setup are you hunting? Level to level. We got low of the US session, pin hammer, back to the high of the day, the week, and the month in a market that is in a strong breakout. Hopefully that helps. We'll continue this in the next video. Keep it simple, rinse and repeat, and may the markets go with you.